Hey guys, happy Thursday afternoon. I wanted to take a few minutes and just talk a little bit about are we seeing the beginning of a housing crisis? I'm Anthony Delicandro, developed real estate recently aligned with Compass. Super excited about that. I'm going to share my screen and dive right into a couple of charts. Last week I shared a video on will surging unemployment crush home sales? And as we continue to see more economic data, I compared what the past experiences of rising unemployment, how they impacted home sales versus what we're experiencing today. As we continue to receive more economic data, what I wanted to do is jump over and share a few other economic points concerning whether or not we're on the precipice of another housing crisis. So basically, there are six key indicators that I've identified that apply to how this particular period that we're in right now is different than where we were 10 years ago during the last housing crisis. Substantially different. Number one, appreciation. When we look at appreciation, this visual below, we can see that over the last 6 years, we've had very healthy and moderate appreciation across the country. If you're in my local market here in South Jersey, you may have experienced we've seen double-digit price appreciation over the course of the last 2-3 years, mainly because we went from having a very high level of bank foreclosures to a much more reasonable level of bank foreclosures. So when you remove a lot of those deep distressed assets from the equation, we experience much greater price appreciation, but that was just a normal expected recovery as this market has become much more healthy. When you look to the period 10 years ago leading up to the bubble, you can see massive price appreciation took place in those immediate years. So much different experience that we've seen in the last couple of years. Item number two, mortgage credits. We can see that the Mortgage Credit Availability Index is an index that charts how difficult it is to get a mortgage. The higher the index, the easier it is to get a mortgage. You can see back during the bubble years, it was wildly easy to get a mortgage. Essentially, there were all of the subprime loans, no income verification loans, very low credit score requirements. Basically, anybody that was able to write their name on an application could get a mortgage in those bubble years, versus today we're at historically low levels. The other really important consideration in this chart is that even though we have very, I wouldn't say difficult, but responsible requirements to qualify for a mortgage, we still have massive demand from qualified buyers that want to buy real estate. So we can see that this essentially was like fantasy land. We're in a much more realistic environment, a lending environment today, and we still have massive demand for people that want to own homes. Number three, number of homes for sale. I shared this in a post earlier today. The new housing starts report came out today, another economic point that I follow closely. And when we look at the number of homes that are available today, again, the difference during the last housing crisis was that we had a massively oversupplied inventory. At the peak of the market, we had in some cases 20, 30, 40 months supply, like years supply of homes for sale. Today, we have very, very low levels of homes for sale. And we can't even essentially build homes fast enough. Take a look at my post from earlier today to explain we can't build homes fast enough for the population that's expanding as quickly as it is. So if you think that it's a competitive market right now to be a first-time home buyer, which it 100% is, as we fast forward into the end of this year, once all of this COVID-19 downturn and shutdown of the economy is over and we return to being able to look at homes freely, we're going to have a wildly competitive seller's market during that time. So just another interesting data point. Number four, use of home equity. Massively different environment today. During the last bubble, people, you remember the expression, people used their homes as though they were ATMs, cashing out billions of dollars of equity, leaving many homes, at one point almost a third of all homes that had mortgages were upside down in having mortgage balances that were greater than the homes were worth. Today, you look at the last 3 years, a fraction of the amount of money was pulled out. As even though we've had rising home sale prices, we've had a fraction of equity that's been cashed out over the last few years. much more overall responsible actions by our greater population and homeowners. So another great difference of today versus what the environment was like 10 years ago. Lastly, home equity. So, right, another massive difference. When people were cashing out, cashing home equity out of their homes, it left people in a very poor position in terms of home equity. Today, over half of all homes in America have at least 50% equity. Massively different experience. 37% of them, right, highest level ever in history, 37% of all homes are completely free and clear, have no mortgages at all. Almost 27% of the homes that have mortgages have at least 50% equity. Remember what I just said 20 seconds ago, a number greater than 26.7% back in 2009, 10, and 11 had mortgage balances that were higher than what the home was actually worth. So a massive reversal in the equity positions among homeowners today. So in summary, the COVID-19 crisis is causing different challenges across our country than we faced in 2008. Back then, we had a very legitimate housing crisis. Today, we're facing a health crisis, and we've had a planned and systematic turning down of the economy, one that in coming months is going to be turned back on, and we're going to see a fast reversal of some of the housing trends. We're going to see declining home sales when we look back at the second quarter of 2020 for sure. The number of home sales are trending downward in high double, not just double digits, high double digits. But again, we're in an environment where it's not necessarily the best experience or the safest environment to go out and look at homes, or if you're an owner occupant, to show your home. But as we get through this, we're going to see a massive return to buyers that want to buy homes, and the number of sales as we reach quarter 3 and 4, we're going to see increased pretty rapidly. So hopefully this is good information. I'm going to share these charts also separately. Any questions, of course, please don't hesitate to reach out, direct message directly. I hope that's, again, the information that we bring is the best in market intelligence that you're receiving right now, and we can help you make the best decisions for yourself and your family moving forward. Have a super awesome Thursday, and I can't wait to see you.